I think we're live. Are we live once again in the dividend dive? What number is this? 157 or something like that? What are you guys up to? Getting settled in. Had a busy weekend. Went to a concert last night, cover band. What are you guys doing? Did you do anything interesting this weekend? It's almost over, but not quite yet. Don't you go living in the future now and thinking about Monday before Monday's here, right? But honestly, have some guests leaving. Don't worry, they're on their way out. You may hear them bleeding through the microphone, just my family. But we went to the Brookfield Zoo. Shout out Brookfield Zoo. Shout out Handsome Devils. They're a Morrissey, Smiths, Cure, In Excess cover band. So hell, that was a lot of fun. It's been a long time since I've seen. Actually, I've never seen a Morrissey cover band. Can you be any more esoteric than that? So look at all you beautiful people here. Thank you. We want to know what you've been buying this week. What are you gonna buy? What I don't know. What kind of weird and strange and bizarre things are you into that you can keep it PG, huh? I this week I bought more. Not a lot. It's been a crazy week, right? Another share of Nike, right? What does Ian say? Can't stop, won't stop. And I know I saw his video. He's not going to invest in Nike, but Caton, bizarre. I don't know the weird kind of stuff that you people are into, but hey, if it's between consenting adults, that's between the consenting adults, and as long as it's legal, whatever. I don't care. So I bought another share of Nike at 63.33. Another share of Realty Income at 56.50, and one more share of VTI, the Vanguard Total Stock Market ETF, at 274.45. So that's all I bought. Two dividends this week. Lockheed Martin, $33, which we'll talk about Lockheed in a minute, right? They got a dividend downgrade. I guess spoiler alert. And then another special dividend from Main Street Capital. All that this BDC does is just hit us with dividends and special dividends. So it's been a heck of a ride with Main Street Capital so far. All right, look at you. Oh, Chris, by the way, Chris, thanks for that email. My Instagram, I don't know if any of you follow. I'm not terribly active on it, but it was hacked. The craziest thing happened. So on Tuesday, people started saying, actually Ryan Williams messaged me. I got Kelly Green emailed me, Ron Pizer, a couple people emailed and let me know that, hey, I think your Instagram got hacked. There's some funny shenanigans going on there. Sure enough, I looked and all right, so I tried to log into my Instagram account. I couldn't get in. It kept saying password wrong. I'm like, okay, that's weird. I tried doing the forget password. Nothing was working. I couldn't get in. Spent an hour of my time trying to get in. And yeah, so when I got home, my wife and I were looking in my email and it looked okay. But then I went to archive and there was like 10 different Instagram things. It was like 4 a.m. when from Nigeria, of course, right? You want to be stereotypical. And they hacked into my email. They switched around the 2FA. And the short of it is I'm locked out of my Instagram account. So I reported the funky post. But my daughter said she got a message. So I think some of you are still getting, it's very frustrating to not be able to get in. I don't have a Facebook, and apparently if you don't have access to your email that you signed up with and you don't have a Facebook account linked to the Instagram account, it's almost impossible to get back into that account. So Wednesday morning, I got a text message, beautiful, bright and early, 5 a.m., woke me up, and it was just rapid fire. They're saying like, hey, I got your Instagram account, pay me $300 and you can have it back. They said they bought it from somebody and they're selling it to me. And I didn't respond, reported it. So, hey, it is what it is. It looks like I might have to start another Instagram. And you know what? We won't pour one out, but I'll tip one back for that old thing. So, but anyway, Chris, yeah, you email, you're one of the people that emailed me concerned. So if any of you got a message, I'm sorry about that. And it's so frustrating that I can't do anything about it right now. But so let's see what, don't worry, you guys, we'll look at these in a minute. I'll let a few roll in. Korean cardboard, DKL. We'll look at that. Shannon, don't worry, man. And you want to know about Lamar, ticker LAMR. Like, so they do the billboards, and it's fun when you're driving on the expressway or wherever. If you look at the billboards, sometimes you'll see Clear Channel, but a big one is Lamar. And Lamar does digital billboards. They do the, old school paper billboards. I don't know what else they do. So, and then Steve, thank you for sharing with us that Lamar gets a 98 out of 100 from all REITs. That's cool. Interesting. Yeah, we'll look at them on Simply Safe. Yeah, Pat, I did. Busy weekend. And like I said, we were at Brookfield Zoo today with the family, enjoying the zoo. I got back in time. So, yeah, it's fun. All our kids are getting older, so we won't be able to do that. Frank, you bought 2 shares of Caterpillar, is that right? Two cat? KC, Korean Cardboard, should get 3.5 shares of SCHD dripped Monday. Oh yeah, that's right. We can look at that. The SCHD dividend comes out Monday, right? Chris, my man, bought VOO, which is if you don't know, VOO is the Vanguard version of the S&P 500. So you're getting roughly the 500 largest companies in the United States. And I like VTI because it's the entire investable U.S. stock market, almost 4,000 stocks. So dig that one instead. But they're very close. They're very close. And it's just the flavor I like. And there we go. Thank you so very much for bringing my tea and not appearing on camera, because it's not the end of the year. Anyway, Chris, you also bought, Walmart, SCHD, Google, and NVIDIA. Yeah, Google and NVIDIA were falling. I saw that. Walmart, too. Could be some rotation, craziness going on. What is the second? Liberation Day? U.S. Liberation Day or something like that? I made that kind of I used some current events as the focus for my newsletter, sharing how Tesla's facing a lot of backlash, right? And one of the problems I have with discounted cash flow analysis is using future cash flows discounted back to today to get a intrinsic value, get a price. It's not that easy. 2 years ago, just 2 years ago, probably even less. Imagine if you were doing a discounted cash flow on Tesla. I'd love to know who had President Trump is reelected, right? He was looked like he could be doing, I don't know, jail time, whatever, guilty as charged, but looked like he wasn't going to be president, no shot there. And then that Elon was going to be running the Department of Government Efficiency and facing backlash for nobody predicted that. And that is affecting Tesla. But you would have had to know that. And it's just, you can't know that. So that's kind of been my problems with DCF. There's so many things. Another thing that some investors far smarter than myself talk about is when companies make acquisitions, like Juul. When Altria, ticker MO, bought Juul, who would have thought that was going to destroy shareholder value? How do you factor that, future acquisitions, and whether that's going to destroy or be accretive to shareholder value? I don't know. It's hard. So anyway, the short of the newsletter is that I think a good starting point is return on capital employed. Just the profits that a company's going to make using debt and equity, all capital available to it, right? So, all right, continuing on with what you guys bought. And if you're just tuning in, share it below. We'd love to know. So Rick, you bought more BP. Patty is stacking cash. You're also in the same boat as Dan Weston. Fun interview I had with Dan. I like that guy. Kind of doesn't pull any punches, I guess. Says what he wants to say. Tony, what's up, man? From Vegas. We'll be out in Vegas. October. Hella expensive concert we're going to. Oh my God, I love you guys. All right, you see what the problem is here, Tony, is that I want to address each and every comment with a very thought out, heartfelt response. But I can't because we'll be here all night, or I'll get to a few. But anyway, we'll be there for the when we were young fest in October. Yeah, that sucks, dude, that you got hacked too, man. And Boaz, yeah, you had friends get hacked. It's, you know, at least I'm not making a lot of money, probably not much, if anything, from the Dapper Dividends Instagram account that I had. So kind of the joke's on them. I had some followers, but you know what? There ain't no way I'm gonna send somebody $300 and hope that they switch everything back around. Nah, but Gorilla Nurse, Gorilla Nurse, you're buying Nike too. Well, I have some words, some thoughts about Nike. That's what I did the little sad swoosh logo right on the thumbnail, so we can talk about that. I mean, I can. Well, let me get caught up. If I forget, remind me. I can sum it up. And actually, it's in the Simply Safe news that we're gonna go through here in a minute. So. In dividends from AVGO, I'm guessing, from Intercomposed. QC Panic Seller. I hope you're not panic selling. CNI, Toronto Dominion, and GFL. I don't, off the top of my head, know the GFL, but Canadian National, right? John shows that he looked at realty income in 2020. It went down to 48. Yeah, in 2022, yeah, it went down to 47. All the REITs went down that far, right? Because that's when in 2022 the Fed started hiking the interest rates, right? And a lot of I don't know, a lot of think it is that REITs kind of behave like bond proxies, meaning that when bond yields are low, income hungry investors will gravitate toward bonds, or I'm sorry, toward REITs and higher paying dividend stocks. But when that starts to shift and the bonds pay more, that's the risk-free rate, right? You're guaranteed that return. If you're not concerned about the capital appreciation, then you're going to buy a bond, because why wouldn't you lock in that whatever is 4% yield? So stocks will fall. And remember, when the stock price drops, the dividend yield pops. It goes up. So it's kind of like, and eventually the dividend stocks will reach a point where that yield becomes too hard to ignore, and then people will shift back into that. And then when everyone buys it, so it's all a big interconnected game, I guess. But traditionally, REITs and high-paying dividend stocks move inverse to the bond yields. And then Gorilla, yeah, we can look up Self. Let me throw that on there. So, yeah, we got a few more. I'm going to get caught up to y'all here. David Lavelle, y'all bought J&J? Yeah, I saw some news. I didn't read it, though. Didn't have time. I saw they had some news on some of their FDA, right? Trials or something like that. Mark, what's up, man? The meth man. That's probably awful to say, but Mark, a few more shares of Walmart. I bought a little bit more Walmart in my daughter's custodial. She had literally $5 laying around, so... with Schwab, you can do stock slices. I think if they are in the S&P 500, you can do a slice. Unfortunately, as of this recording, you can't buy slices of ETFs, which is sad, because I wish you could. That would have been nice. And if it is, then we would move my wife's Roth to Schwab, because we buy $50 every week of VTI in her Roth. All right, well. Bubble. Well, thank you. Panic Sellers buying CubeSmart. Nice. Alan wants to use his tax refund to buy more SCHD and SCHG. G is the growth. D is the dividend. So that's your dividend play. Oh, Earl Grey. No, this is Benner Chai black tea. And it comes to us from the land of Aldi. All right. Love you guys. I'm going to go a little bit more quicker here. How does someone as a foreign-based investor in Europe confidently buy U.S. stocks like retail stocks? Dollar Tree, Target. Well, Target is a little different than Dollar Tree, right? Dollar Tree is your dollar store. And Dollar Tree just sold Family Dollar for $1 billion. And I think it was 9 or 10 billion that they paid for it not too long ago. So that was just a wonderful destruction of shareholder value from the management team that orchestrated that gem. But Family Dollar was sold to a private equity firm. But, there's there's struggles right now. And I know in the video I did with Realty Income and Sumit Roy, the CEO of Realty Income, he shared that not all these stores that they have exposure to that are tenants source most of their products from China. I think, and I could be wrong here, and it's in my video, but I believe it was Dollar General has 3% of their inventory that comes from China, while I think Dollar Tree might have been 27-ish, a little bit more. And then Amazon is like 70% something, but most of their revenue comes from AWS. And he said Amazon too, because I believe Amazon is one of their tenants on the industrial side of their portfolio. All right. No, I didn't see Pepsi drop on Friday. Does anybody know why? Nick's gonna buy a few Nike shares. All right, I'll save Nike. We'll talk about it. I'll give a few thoughts real quick here. We're gonna get to the news. Bubble Bot, Waste Management, SCHD, Triple QM, Merck, and Lockheed Martin. Lockheed Martin got some news coming up on them. So that one is, I'm holding my shares, but I wouldn't be buying any more right now. Bringer of dividends, Nike killing you. I'd love to know, because it's killing you, what's your reason for buying? Did you buy it as a trade, or did you buy it for a long-term hold? Because if you bought it for a long-term hold and the reason that you bought it for remains intact, then it could be a great opportunity to buy more. LyondellBasell, Nick, they were downgraded, I think, again, by Simply Safe Dividends. We'll actually start off there. It was last week we talked about it, but remember, LyondellBasell, they filed for bankruptcy at the end of, it was like 08, 09, and it was all about commodities. Management doesn't have any control over the commodity prices, right? Their inputs. So that's always a risk. And granted, I don't think I told you guys, I'm a welder. I have a passion for passive income, started this channel, always reading, always learning, trying to learn, improve. I love constructive criticism and feedback, because if I'm wrong on something, it helps me be better. I can share it with everybody else. But LyondellBasell filed for bankruptcy. When they came out of it, that is the Lyondell you see now. So shareholders that were prior, they got nothing. I believe they got bumkus. So there's always that risk with LyondellBasell, and there's been issues again popping up with the commodity, and kind of like Albemarle, we'll talk about them. So, oh dude, Tony, 32 shares of SCHD dripped. Well, if anybody's good at math, you can find out how many shares Mr. TK owns. But, and then buying ASML and Salesforce CRM. Nice. Bubble beat me to it. Thank you for speaking for me and telling Tony nice. 10 shares of LyondellBasell, but debating between that and Dow's the better bet. Yeah, we can look at maybe we'll peep in on Lyondell real quick. And I think we're there. Nice. Ray, don't worry about being late. Don't let it happen again, my man. It's almost Macho Man. Shout out Macho Man Randy Savage. He went to high school where my daughters go to high school. Love hot tea. ASMR. Dividend style. Pepsi's up over the last 5 days. Should be. Yeah, I didn't see that, but Boaz, you say that Nova is killing you short term. I like that distinction, short term, because in the short term, what did Benjamin Graham say? Because he's departed now, but in the short term, the market is a voting machine, but in the long term, it's a weighing machine. And the whole thing that means is it's a popularity contest in the short term and perception. But in the long term, if earnings keep increasing and the company keeps increasing their profitability, stock price is going to follow. I guess unless they're diluting the hell out of shareholders, then that might not hold true. But generally, stock price is going to follow earnings, right? Yeah, 80 Nike at 70. Okay. Broadcom got hit hard this week. Yeah, I must have missed that one. Dividend, good old bringer of the diamond dividend diamond hands, I think is what I was trying to spit out of my mouth. All right. Oh, check this out. Watch this, guys. If I was slicker, if I was a lot quicker, right? Did somebody say Macho Man?
Oh, yeah, dig it? Yeah.
God bless Macho Man Savage. I had that one saved in there. I used that a long time ago. I forgot about that. Just remembered right now. Hi, Bernard. Hello, Bernard. Welcome. Who diluted? I don't know, Boaz. It's rapid fire here in my brain. So remind me who diluted. All right. I think we're going to do news now. Look at you. 65. Beautiful, happy, shiny people. By the way, I don't know if any of you like Radiohead. I've never been into Radiohead. I know 2 of their songs. And after the cover band I saw last night, I am even less of a Radiohead fan, if that's possible. Didn't do a very good job, I think. But Puckman's loading up on dry powder in the keg. Careful with that dry powder, man. Don't let it sit around too long. It might get wet. Meaning, I don't know what that means. Maybe if the market keeps going up and up and you got all this cash sitting around, up and up and up and up, then you're going to have wet powder because you're not going to be able to buy as much as you once were. Publix bonus. Wait. I don't remember. Do you work for Publix? What's the Publix bonus? I don't know. Maybe your pension? Oh, dude, that's awesome. I should get that. Somebody made a custom Randy Poffo. What were they called? So Macho Man's brother, when I was a kid, I know this won't be pro wrestling talk. Don't worry. It's very limited. I was into wrestling in the 80s when I was an itty bitty little cheering. But yeah, the Poffos, Leaping Lanny Poffo was Randy Macho Man Savage's brother. The Poffos. Yeah, he tried to play in the MLB, right? Yeah, he was a baseball player. Amat, all right, that's 4, Jason. So I'll write you down, and then we'll do news, and then I'll jump real quick, and we'll take a spin through, see what's going on with those. And Keurig Dr. Pepper, KDP diluted a month or 2 ago. Yeah, and all that means, if you're new and you don't understand share dilution and you think, this is gobbledygook, what are you talking about? It means that a company is putting more shares out into the market, and because there's more shares to spread the same amount of earnings over, it makes each current share and the new diluted shares less valuable. But when the reverse, companies buy back their shares, right? Share buybacks. Now there are less shares to spread earnings over, so it makes those shares worth more money. So dilution can be a way to bring share price down, and there's different ways that companies dilute, but on net, after you'll hear numbers like fully diluted. What that means is they'll take all the stock options and grants and things that could trigger and happen, and what the earnings per share over fully diluted would look like. And it's another metric. Oh, Caton. Oh, you grew up in the 80s too. What's up, man? What year were you born? I was born in 78. Nike at 200 daily moving average will buy like an addict. Yeah, we'll see. We'll see if it can hold support. But again, right in the short term, if you follow markets, that's for traders, right? Looking at the charts, the technical analysis. Dan, who I see, we talked about that he talked about it for a split second. But when you're looking at a chart, the thing that is, as Warren Buffett taught me this, right? I love saying that he taught me it, but so I love the 79 Smashing Pumpkins song. I just saw a cover band by them last night too. Singer was very bad, but Billy Corgan's very hard to imitate. So, the technical analysis, if you're buying and selling based on what the chart tells you, well, then the stock market is instructing you, right? Instead of serving you. So that's what one of Warren Buffett's big lessons from Ben Graham is to let the market serve you and not instruct you. So if you get freaked out by stock price movement, the market is instructing you, and we want to let the market serve us. And again, that's the Warren just standing at the plate, waiting for that fat pitch to come. You can knock it out of the park, and there's no called balls or strikes. You can just sit and wait. And yeah. Oh, dude, you're a pharmacist for Publix. Well, We need you, man. How is that going? Are you guys feeling any pressure from Amazon? My wife had something shipped to the house and the wrapper said Amazon Pharmacy, and I was like, uh-oh. You know, it's not good for Walgreens, that's not good for CVS. But yeah, I'd like to know your take on that if you want to share it. All right, couple people to say hello to, special people. Dan, thanks again, man. I hope you enjoyed the interview. Do you think I cut it up too much? And I'd like to ask a lot of you that. There were times when either myself or Dan, like you do when people talk, like I do right now, you think you use those filler words when your brain's collecting, I cut that stuff out because I feel it's a little bit snappier and tighter. So I don't know if you guys appreciate that, let me know. There's Lisa. What's going on, Lisa? Thank you for swinging on by the channel. All right, we're going to do some news here. And, all right, I don't know if that's some weird, I don't know, yellow submarine. I get it, but I don't get it. Might be some inside joke here, but hey. All right, so let's do news from the land of, sorry if I whistled in your ear there. It's like me with the meerkats. All right, change that, give you more real estate. All right, here we go. So this is where we are. So yeah, we ended last week with the LyondellBasell. So they reaffirmed their safety score of 51, borderline safe, and it's an industry slump. And that's one of the things you have to worry about with commodity companies like Albemarle. And they downgraded them to 50, borderline safe. Dude, they shot up crazy during that EV pop, but because, right, 70% of their, this tells the story. Here you go. Well, let me give you the whole story here. Let me find the number I read. This is it. So for Albemarle, lithium accounts for around 70% of their revenue. Well, guess what happened? And when lithium went skyrocket bananas crazy in late 21 all the way up to mid 22 and then bleeding over into 23, that was great. Albemarle, I remember because I owned them once upon a time. I bought them, I think, in the 70s or 80s, and I sold them to buy J&J when they were in the 150s, 60s-ish, and they shot up, I think, over 300, and you see why. But then look at the price of lithium. And this is one of the problems when a company is so tied to a commodity, management has no control over this. So it's just plummeted, and it's really, really hurting Albemarle, and they shared that they're going to have to dip into their $1.2 billion cash reserve to sustain that, the dividend and deleveraging by paying down debt. So not good, not a good look for Albemarle. And you know what, let's take a peek here real quick since we're on it, just to show you, because this could tie into with like Lyondell, but when the commodity is that tied and a management, that's why one of the reasons I sold LyondellBasell. And it's with lithium. Do you think people care where they get the lithium from? How many people that source or companies that source lithium say, no, we got to have that Albemarle lithium, right? So that's one of the problems. Like steel. Do you care where you get steel from? They're probably just going to worry about just getting that steel, the best price. So yeah, they slowed their dividend growth, even though it's been going up for 30 years uninterrupted and growth. But let me look at a few. They show that they're potentially undervalued. Here, look at this. This is just buckets of yuck. The free cash flow payout ratio has been negative for quite a long time. Just awful. Earnings per share payout ratio negative. I mean, my God, going all the way back to 2017, they've had 1 year of positive free cash flow per share. So I don't know if anyone understands this business better than me, but it just looks awful. Yeah, they slightly raised shares during coming out of the pandemic. Yeah, total sales are falling off, but negative return on invested capital. It's all, I think, because of the commodity. So there you go. Negative 21% for cash flow. Their margins are awful. Negative interest coverage rate. Ugh. what a bucket of yuck. So I'd steer clear of Albemarle, quite honestly. But hey, maybe you want to buy it, knock yourself out. This is going to be a short news week. They refreshed, and this is just Simply Safe Dividends, by the way. Just there's lots of news, but for simplicity and because we only have an hour show that I spend with you, I don't want to spend the whole turn into a news program. But Principal Financial Group, they refreshed their outlook on them. Did Simply Safe. Here you go. Nike, they downgraded from 99 very safe to 90 very safe, and I still think they're going to be okay, but it could take some time, meaning that things aren't going to be instantaneous. I really think, right, John Donahoe left a, and Dan, please chime in. I know Dan doesn't like Nike, but honestly, they're just a global giant. They're so integrated. They're so well known. And I know there's Hoka on, right, and Brooks and all that, which, by the way, Berkshire Hathaway owns Brooks shoes. But John Donahoe, the former CEO, he's a tech guy. He was an industry outsider. He was CEO of consulting firm Bain and Company. He was CEO of PayPal. He was CEO of ServiceNow. I think I'm missing one. So I know he was CEO of those four, which that's all tech, software, technology. When he becomes Nike's CEO, yeah, the pandemic hit, but he started shifting heavy into digital sales, getting away from Foot Locker, taking the shelf space off, trying to cut out the middle person, right? Middle person there. See, I'm all about DEI, I guess. I don't know. Cutting out the middle people like Foot Locker and Journeys. Is Journeys still around? And it backfired big time. He was asked to leave. And who did they bring in? Elliot Hill. He was 32 years at Nike. Lives, breathes, was born, bred, and raised inside of Nike, came up through Nike, rose through the ranks. So he understands the business. He's trying to repair the damage and get back to the athletes and a little bit further away from just being a fashion brand. So anyway, that, and this overvaluation, they're basing that on, they're basing it on the 5-year average price to earnings ratio. Well, yeah, the earnings has dropped, right? Nike's earnings are, and this is worrying. We'll see. This is projected 118% over the next 12 months. It hasn't happened yet. Nobody's psychic. Nobody can predict the future. But what was I looking at? Sales are, sales are starting to drop. But they still have really strong margins, and I don't remember what I was going to look at now. I completely forget. But anyway, the earnings. Yeah, earnings per share. Yeah, so when they base it on the price to earnings, the E of the PE, the E has been falling. So naturally it's going to look expensive. But if and when the E recovers, it's going to make things look a little bit better. So, but when that will be, we don't know. We have to hope and assume it will be. So anyway, Nike was downgraded, but they still very good balance sheet, fantastic credit rating. So that's me. It's going to take time though. Two more here to hit you with. Salesforce, ticker CRM, raised that. I forget which one of you bought it. Raised their dividend 5%, which is their first dividend raise since they got a baby dividend policy. Good for you, Salesforce. And then Lockheed Martin, they were downgraded from 84 very safe to 80 safe. And Dan kind of talked about this. There's two things with Lockheed. They lost their next generation F-47 to Boeing, right? The Air Force's contract. So that was a gut punch. And then the whole tariffs, right? Riling other countries. They're rethinking, as it says, the allies are rethinking their dependence on U.S. I think Trump, they kind of want to taper off making these machines, selling them. So the F-35s have taken a bit of a hit. And that's two things. And then obviously Elon has talked about drones, that you don't need manned fighter jets, that it's going to go toward having drones that could affect Lockheed. So there's some headwinds there. I'm going to pop into the chat again real quick, and then the four of you, I will look up what you... What's up? What are you doing? Oh, You want to say hello? Nobody cares. Ladies and gentlemen, boys and girls, my daughter, Ivy, did not want to say hello. She's 17. She's in her pajamas. She just showered. So, kids these days, right? Yeah. If I put myself in her shoes, I'd be like, you're crazy. Lunatic. It ain't gonna happen. Glad you liked the interview with Dan. Thank you. Good. Thanks, Eddie. Yeah, I don't want interviews to be too long. I think between 30, 40 minutes tops is good. I think it's a good enough time to get a little chat going. Maybe leave something on the table for the next time. So, glad you liked it. Sam, what's up down there? The other side of the world. And Caton. Caton. Messner. Are you from... Sorry, that name kind of reminded me of Messier. The Moose. I liked Mark Messier. Anyway, starting to flash back into my old hockey. Typical commodity hype chart. All strategic metals look the same at the moment. It takes years to source. Yeah, and I think you're kind of backing up what I said is that that's what you have to think about when you're buying commodity focused companies. And oh, you know what I did do that with, and it worked out. It backfired on me. Boise Cascade, because it's all lumber, and I thought like, that was dumb. I started a position, and the stock price more than doubled from where I had sold it. So I outsmarted myself on that one. Oh my God, Pat, you're burning generator fuel to watch this shenanigan nonsense. Well, maybe it's taking your stuff. Where are you at again? Michigan, right? Oh, Steve. Well, you know what? It's okay. My wife has Brooks. I guess and I know some of you has asked, hey, don't you wear Nike? I have Nike slides. They're like 7 or 8 years old, and I have a pair of Nike basketball shoes I bought for walking in, but I honestly don't like the design of them, but they were dirt cheap. So apparently those were some of the ones that probably weren't selling well that they just wanted to clear and get rid of. So I bought them, but I guess as I say, how many of you own Altria? How many of you own Philip Morris? How many of you own Imperial Brands and don't use tobacco products? Probably quite a few. So that way, Nick, I would agree. Nike does have a huge moat. They're still the number one athletic retailer in terms of revenue, and it's not even close. Adidas, I think, is right around half in the number 2 spot of what Nike is. So it's going to take a while, but well, you know what? And I guess the second part about tied to culture, yes and no, because and I've told you guys this before, that Nike's ad spend last year, just what they spent on advertising. So billboards, contracts, commercials, magazine ads, what have you, Nike's ad spend equaled that of, I think it was On and Deckers, their annual revenue. Both of those companies' annual revenue was the same as Nike's ad spend. So that kind of gives you a little bit of feeling for how ginormous Nike is. And yes, people say, oh, well, they got, On and Hoka and Brooks, they're all coming. Yeah, in running shoes, right? But honestly, I don't know if they'll ever overtake. And there was a vacuum created, again, by missteps from John Donahoe, pulling the Nike shoes out of essentially Foot Locker and all the retailers, the brick and mortar stores, because he thought, I guess, they were going away. And what filled the shelf space? All the shoes that are in On, Hoka, Brooks. People got to see them, touch them, feel them, try them on, and that was a big boon for them. So a Nike misstep led to those companies getting a bigger foot in the door, will you? So that's, but it's going to still be a part. There's a lot of people, like, again, at the zoo, I saw a lot of people wearing Nike shoes as a fashion statement, right? They were wearing Nike shoes that accessorized with their clothing motif. I don't know. All right, so let me get to you guys. I got we're going to go real quick here with the 4 of you that wanted to see a couple of your stocks. We'll pop those on. I'll run through them as I'm almost caught up here. And good. I'm glad you enjoyed that, Nick. Thank you. Oh, yeah. What's up with Kevin Burgess? He said he was going to postpone the live stream, but I don't know. Maybe he's backing off on the YouTube, you know? Nike is a cult. All right, all right. Love it. There's my guy, Craig. That was fun last week, man. I appreciate it. You were lagging, though. I was going to give you crap on the program, but it wasn't my, you know, we were on Ryan's chat. I felt I was going to say we're over at Ryan's house. But, yeah. If you are doing YouTube, man, figure it out. I don't know what you talk to me. I'll text me. I'll tell you what I use for live streaming. But yeah, and that same thing. Nike brought that up in the earnings call. Elliot Hill did with the MVP shoe that Jalen Hurts wore, and then for the halftime show, right? Because forgive me, I'm not into hip hop. I can't remember the guy's name. I know my daughters were laughing about the A, something with the A on his chest. Like, it was a dig at another Kanye maybe, or P. Diddy. I don't know. I get them confused. I'm so sorry. But anyway, they were wearing Converse, which is a Nike product, right? Nike bought those. Oh, how is Nike ad spend different than all those AT&T trucks you hate? Well, they don't have to do it, right? They do it, but as long as that ad spend is growing revenue. But AT&T is very capital intensive, right? You brought up the trucks that you see going around, the people driving the trucks. You see these stores. Every time I see an AT&T store, that was one of the things I had to learn. I used to think, look at that. There's another AT&T store. I own that company. But dummy, that's overhead, that's rent, that's paying people to be in that store with the lights on that you have to pay to keep the lights on. You have to pay utility. So all those stores, all those trucks, all those people, all the equipment, Nike, Verizon, T-Mobile, very, very capital intensive business. And it's a drag on the growth, I think, performance of the stock, although it's pushing $30 a share right now, which is nuts. So, okay. Yeah, John, we kind of, a lot of people have talked about SCHD. We could, but my thought on that for those of you that are new, remember when you buy any ETF, you're buying the methodology that's going to decide what goes in, how long it's held, the rate, the weighting of it in the ETF. It's all the methodology. So it would do you well before you buy any ETF to focus on the methodology. What's under the hood? What makes it tick? Yeah, I think there's still a cult. Probably. Dude, Nick, what's up, man? Nice to see you. We got to talk more, you know? We got to talk. You're kind of like me. You're a busy dad. You know, we've got our different situations going on, but no, it doesn't always translate into revenue. I think you meant to say doesn't. You know, but it helps. It helps to keep front of mind. But I guess the overall point I was making with ad spend is it's not a capital intensive requirement like AT&T, which still they spend on ads too, right? I mean, they had to spend money on AT&T Stadium where them Cowboys play. Yeah, you did mean doesn't. I know. I agreed. I agree. But companies do it. And, you know, I guess unless you're Tesla, right? Has Tesla ever had an ad? I think I heard that. All right, here we go. So I'm caught up, and let me see what you say here. Oh, Lou in last week's newsletter, CEOs and management. I think they do. I really think they do. So kudos to that. Oh my God. Did I say stocks? Maybe I did say stocks, my friend. You got a problem with that? We're gonna do a look at some stocks now. We got Korean cardboard. We got anyway, enough of the goof. But like, just get on with it. Stop goofing around. So, ladies and gentlemen, here we go to give my thoughts on DKNG. L. I don't know. What do you got going on here, Korean Cardboard? Delic Logistics Partners. It's a midstream service company. They show the dividend safety as 24 unsafe. You do get a K1 with that. I'm going to go through these quick since I got 4 of them. So, as usual, man, you can pause the screen. I'll try and pause or stop on each one here. But 12 years dividend growth. Well, they've been growing it nice. Let's see. They pay a quarterly dividend. Yeah, appears speculative. So let's see why. Yeah, this is why I've never even heard of this company. So this is all just going to be my uninformed opinion based on some of the financials that we see here very quickly. But yeah, it looks like it's actually at an okay place to buy. Nothing of those where the dividend yield or the forward price to the discounted, or no, distributable cash flow, the DCF. But yeah, it looks near the 5-year norm. Yeah, for an MLP, look at the DCF payout ratio. So, I don't know, it's nothing crazy. 77%, that's good. But, yeah, DCF per share has been ticking down a little bit. So you'd like to see it when it hit a high in 2020. We'd like to see that going up instead of ticking down. So I wonder why it might be their debt, why they give it such a low ratings. Negative sales growth. Yeah, they've been diluting, but they're an MLP, Their total sales have been dropping a little bit. Let's see. Free cash flow doesn't matter because it's a MLP. Operating margin is good. There, that's the problem right there. Their net debt, 98% net debt to capital. And they have a very low interest coverage ratio. So it's tenuous, very tenuous. If those numbers are accurate, I wouldn't bother with it, man. I would just buy one of the bigger names like Not Financial Advice, Enterprise Products Partners, or one of those. Lamar, again, we talked about it briefly, that this is Billboard's dividend yield of 5.5%. Looks to be reasonably valued. So says Simply Safe Dividends. Although they did cut the dividend during the last recession, so. Now they cut the dividend during COVID times. That's interesting. 4 years growth. Okay. But they've been growing it quicker. But that's why when you have a black swan event like that, so yes, I do hear my accent now. But when you have a black swan event like that, doesn't the dividend, if you just imagine that gone, it looks like it would have been on the same trajectory. So from where they cut, the dividend 1, 2, 3 years from then was above where it was cut. So, you give them a pass sometimes for these black swan events where the government's shutting down businesses and nobody spends on ads anymore. So they had a special dividend. All right, go really quick here. Looks reasonably valued. Were they a REIT? I don't remember. Let's see. Yeah, they're a REIT. Okay. So, sorry if I went by this one. Yeah, it looks like be all right place to buy. Close to 52-week price low. The adjusted funds from payout ratio, that's better to look at for REITs, not the free cash flow because they have to use so much of their capital. So it's better to look at the AFFO, which is good. I mean, it's a little higher than it's been traditionally for them, but AFFO per share has been growing nice. Yeah, look at it again, except for 2020, it's just been in that nice constant stair step up. But I don't know, we have to wonder, like, do you ever think that... What I will share is Charlie Munger always wanted to think of no, like I'm going to say no. I'm going to be skeptical of any prospective company and try to talk myself out of it instead of talking yourself into it. So can you think of billboards going away? Shares outstanding has just been slowly, yeah, that's not bad for a REIT, but I don't know, it looks okay. It looks okay. I mean, I'd have to think more about what some of the headwinds could be. Good operating margin. Yeah, net debt, nothing, little high, but yeah, I don't know, man. I don't know what the future of billboards are. I mean, I see them everywhere. But Gorilla Nurse, you wanted global self-storage. Hey, congratulations. It's almost a penny stock. So it's $5 a share. Remember, anything under $5 is technically considered a penny stock. I know, it's not a penny, but I don't make the rules around here. When were they founded? Oh, oh my goodness. It's a $56 million micro cap. Wow. That is a very small company. So will they have will they have growth in the space? I don't know. I don't know anything about them. Doesn't say. Oh, they're in Illinois here. Okay, doesn't even say when they came about, but dividend growth is just bleh, bleh. They cut it in 2013 and it's still not above there, so that doesn't look good. Yeah, honestly, I think I'd rather just earnings payout ratio, because they're a REIT, right? Sorry, yeah, so they're a REIT. So look at the earnings payout ratio for a REIT, really high. Yeah, I don't know. They must be. I wonder if they're probably diluting and taking on debt to keep raising that dividend, but I don't know, Grill and Nurse. This one wouldn't, I can already tell it's just not for me. Sales growth has been low. Shares outstanding, a little bit of dilution. Sales though keep increasing. That's good. Yeah, I don't know. Margins aren't that bad. Well, their net debt is pretty low though, so I don't know. I'd have to understand this a lot more. It's a micro cap, but that the dividend. If you're buying it for the dividend, I mean, I don't know. I guess they can keep paying it, but that's a tricky one, and I don't know. I'd have to look. I wonder what it's traded on. I wonder if it's a pink sheet stock. Because if it's pink sheets, then they don't have the same reporting requirements as do other companies. And then Jason, Applied Materials, 86, very safe. Well, looks like it could be. Yeah, chips, I'm not good with. I've tried to understand chips. A credit rating, very nice. They've been around since 1967. They maintained the dividend during the last recession. Stupidly high growth since the tech boom. There you go, in the late teens. Really fast dividend growth. Quarterly dividend. There you go. Looks like it could be undervalued. Barely. So, and yeah. Is this sector rotation? Is this the tech boom going pop? Finally? But it looks definitely like, if you believe and you understand the company, could be a really good time to buy. Yeah, really low free cash flow payout ratio. Yeah, this company's been doing well. So I understand potato chips. I understand Dorito chips. I understand Lay's chips, but the computer chips, not so much. I mean, I understand what they do and why they're necessary, but I don't understand like the moats and what makes an NVIDIA chip better than an AMD chip, better than an Intel chip, and so on and so forth. But yeah, look at buying back shares down to 830 million outstanding. So yeah, just really solid company, great margins. Obviously not a very capital intensive business. So no net debt. Beautiful. Yeah, beautiful company. So out of all these, I think that would be the best one just based on that. But obviously, why is the price so low? So there's some thoughts. Everybody, we made that. How about it? All right. Now, let's go. Lucas, thank you for coming to the live stream. What is he doing? He's talking like the Micro Machines guy. Hey, shout out to you if you remember the Micro Machines guy. I think he's dead now, right? All right, let's see if anybody said anything really important. Oh, dude, the market didn't tank. People thought it would, but I was like, I have it's a weird thing, not a soft spot, but a fascination with the whole JFK thing, and I was hoping we'd get the files released, but anyway, 1965. Oh my god, I forgot it. No, 62, right? My god, I forgot. No, 65. Yeah, it was 1965, November 18th of 65, something like that. The reshuffle party. Yeah, Craig shared everything. We're too late to go through now, but Gabe, that's great. Thank you. I mean, sometimes I don't know. Sometimes I was telling this to Dan. I have like 200 topics for videos. I'll never run out, and I barely scratch them because there's always something new to share. And What's your question, Gabe? Oh, here we go. Oh, Freeport McMoran. I don't remember them. I don't think we have time, Gil. I'm so sorry, man. Maybe next week, but I'll just tell you if they get a safety score, or I'll actually show you the I'll show you the stock card, the stock card. Pat, my friend, I'm so glad you asked about Freeport McMoran. We'll go here, and I'll tap this, and we'll bring you and whisk you away to the Simply Safe Dividends card of Freeport McMoran, who gets a dividend safety score of 50, borderline safe. I could just, my wife probably thinks I'm a nut, and I haven't had anything to drink yet. But there's your stock card on them, Copper Miner. 50, borderline safe, could be overvalued. So because we're pressed for time, Pat, that's all you're going to get about Freeport McMoran. Let me stop sharing that and talking like this. All right, Gabe, I want to answer your question here. Best way to structure a Roth IRA? Bunch of growth stocks so they can skyrocket tax-free. Well, if you can pick the ones that are going to skyrocket, that's half the battle. That's more than half the battle. First, a bunch of dividend-focused assets so they can print tax-free money inside your Roth. I think you are older. I think you're closer to my age. So you got a lot of years toward retirement. If you have a Roth IRA, remember, you can always take out, again, not tax financial advice, but from what I understand, you can always take out your contributions. Meaning if you put in $7,000 this year and next year you're at $7,500 and you didn't put anything else in, you can always take out that $7,000 tax-free because it's post-tax money. You just can't take out the gains. Any gains, anything above and beyond what you put in, you can't touch that. So I guess it's kind of like a quasi-emergency fund in a way. But actually, that's why I bought Harrow Incorporated. I hold that in the Roth. I know they wanted to make a rule against... Who's that investor? Is it Peter Thiel? I think Peter Thiel bought a boatload of. I think he has Facebook in his Roth, and it's something stupid. Like he has just thousands of shares when Facebook was under $1 a share or something like that. And obviously now it's a massive mega gain, and apparently he's going to owe no taxes on any of those gains. So. If you can pick the next Facebook under $1 a share in your Roth, they'll have at it. But honestly, I don't know your risk tolerance, any of that. But just think, whatever's in your Roth, as long as the tax code stays the same, you will never pay anything on those gains unless you hold an EPD. I don't mean to point at you, Gabe, but if you hold an EPD, an MLP, is going to be, you're going to get so confused at this. But if you hold a company like Enterprise Products Partners, which is a master limited partnership or an MLP, they are set up as a business structure that passes the earnings through to you. So you pay taxes on that and you get a K1. So if you're over a certain amount of dividends, even though it's in a Roth, you could still pay taxes on those dividends. And I think it's unrelated business taxable income, UBTI. That's just way too much. You're so confused. But for a stock like PepsiCo, Procter & Gamble, whatever, if you buy that in your Roth, you're never going to pay anything on the capital appreciation or the dividends until you retire. So good night, Shannon. You're probably gone. 1963. Yeah, I guess, what was I thinking? 65. I don't know. Let's just see my history. Don't you love that? I have a particular fascination with the JFK assassination, everybody. And I think it was in 65, or was that 63? Maybe it was 63. Yeah, he's like just completely negated everything I told you, right? There you go. Yeah, Southern Copper. That's been a popular one. I know people have talked about. PayPal. What's up with PayPal? Oh, are you talking about John Donahoe? Wasn't he CEO of PayPal too? No, eBay bought PayPal. Or did he spin it out? I don't know. Anyway, the point is that the former Nike CEO John Donahoe was tech focused, tech minded industry outsider. He didn't grow. So I'm so damn curious to see if Elliot Hill can turn this around, because if anyone can do it, it's somebody like, oh, I see what you mean. Okay, PayPal for Peter Thiel. All right, I thought it was Facebook, but there you go. Oof. Or was it? Does he have both? Oh, wow. Yeah, so there you go, Gabe. No pressure, buddy. All you have to do is pick the next PayPal and Facebook when they're, right now trading at like 12 cents a share or a buck or $5. No problem, right? Good luck to you on that, my friend. Oh my God. Well, it's time to go. My God. I love all you people out there. This is fun. I have fun. I look forward to it. If I didn't get to any of your questions or I blew right the hell right by you, hey, what do you want me to do? I'm just one guy here, huh? Sorry about that. I don't know. I was going to call you guys a bunch of jagoffs, but I thought that might not be too nice. You can't go calling your listeners jagoffs. You jagoff. Anyway, I don't know. I'm going to stop. It's Sunday night. We didn't get to what's going on this week. I think there's non-farm payroll coming out on Friday. April 2nd is Liberation Day. April 1st, right? That's Tuesday, right? I was just thinking, what's a good joke? I don't know. I should have had a joke for April Fool's Day, but all right. Anyway, you guys enjoy the rest of your week. I'm going to get out of here. I love you. I will talk to you in the next episode. So long. All y'all. See you next week.